Hi, everybody. It's Marianne Cashman with Raveis Real Estate, and I am super excited to have with me today Andrew Van Dyke from Raveis Mortgage. Hi, Andrew.
Hey, Marianne.
So before we get started, I wanted to give everyone a little bit of a backstory and why we are here together. And that is that I was talking to Andrew last week about the number of buyers I've been speaking with lately and how, as we all know, competitive the market is right now. And what can we do with our buyers to engage them and encourage them to take certain steps now before they find that property of their dreams? What can they be doing to be a smart consumer? And so that's what brought us here together. And before I ask Andrew a couple questions, I wanted to give everybody a little snapshot on, you've all heard the market is hot. Well, let me just share with you a couple stats that I have. First of all, looking at Andover, and this is a comparison of December 2020 to 2019. Andover, the inventory in December was down by 48.8%. Also, comparison from December 2020 to 2019, the median sale price for a home was up by 15.2%. Now, in North Andover, we saw that inventory was down by 59.4% from one year to the last. And also the median home sale price was up by 13.3. So again, you hear us talk about that competitive marketplace. One of the things that I talk to my clients about is connecting with your lender. And Andrew is certainly one of those lenders that I recommend highly. I actually used him personally recently to refinance this year. It was a great experience. So that's kind of what brought us together today. And Andrew, thank you so much again for joining me and just kind of talking about ways that we can advise our buyers to get better prepared.
You are most welcome, Marianne. It's really happy to be here. I think that it is a crazy time right now. Rates are at all-time lows. So I'm only too happy to reach out to the general public and let them know exactly what is going on in the mortgage world.
Awesome. Hey, Andrew, you want to start off and talk about rates a little bit and what we're seeing?
Absolutely, yeah. As I mentioned before, we are seeing all-time lows in interest rates, from government programs down in the low twos, conventional, which is up to 524. For a loan amount, we're looking at, mid twos, and jumbos even high twos. So these are all for 30-year fix. It's really a great time to be buying right now.
Fantastic. And again, the refinancing is going strong still, right?
It is. For the most part, 2020, most folks refinanced at that time, but we are still seeing a lot of appetite at the moment for refinances, but not quite as much as 2020. But the rates are just so good right now that, whether you're refinancing or buying, you're going to be getting the best rates you'll ever see.
Pretty appealing.
Yeah.
So can you talk a little bit about the credit score, Andrew, and how important a buyer's credit score is? I had one of my clients, husband and wife, recently ask me, if one of their credit scores was lower, should they go that route, and just have one person on the loan? Can you talk about how credit scores are important, please?
That's a great question. And I see that a lot, actually. I always recommend to my clients, both of you fill out the application. Let's take a look. If we can qualify with just one versus the other, who's got a better credit score than the other, that's going to get them a better interest rate, obviously. So that's part of what I do is I coach my clients in terms of, well, this is going to be your best option moving forward in terms of interest rate versus credit score. And clearly, the higher your credit score, the better interest rate you're going to get. So it's part of the service I provide. But yes, credit score definitely does dictate what kind of interest rate that you'll get on a loan, for sure.
Right. All right. Andrew, can you talk about the difference of a mortgage broker versus a bank? And, I know there's lots of differences there, so please feel free to.
There are actually, and another really good question. So in the mortgage world, there are really three different types of lenders. There's a mortgage broker, there's a mortgage banker, i.e. a correspondent lender, and then there's your brick and mortar banks. So the good thing with a mortgage broker is that they have access to over a ton of different investors, rate sheets and programs, etc.
Mm-hmm.
But the bad thing with a broker is that they lose control over the transaction, meaning that they will ship the file to Idaho, where the investor is. The investor there will underwrite the file in Idaho. So you lose control over the timeline, etc. On the other end of the spectrum, you have your brick and mortar bank, which, the good thing with them is that they'll underwrite their own files in-house locally. So you have good control over the transaction time-wise. However, they only have their own products and pricing to offer. They don't have a full spectrum to offer the client. So oftentimes it will be round hole, square peg.
Mm-hmm.
Right in the middle, which is what we are. We're a correspondent lender, which means that we underwrite our own files here locally, but at the same time, we also have access to a multitude of different investors' rate sheets and programs in order to make sure that our clients are going to be a round hole, round peg kind of scenario. So those are the three different kind of lenders. Yeah.
Awesome. Thanks, Andrew.
Yeah.
As far as your getting a pre-approval goes, right? Now, every buyer knows you got to get a pre-approval. I have a lot of clients that tell me, Andrew, oh, I'll call you when I'm ready. And I say, no, call me now. Whether you're selling or buying, it's so important that we start talking. And I say the same thing about lenders. I always encourage my buyers to talk to a lender. And I think it's really important also that a lender be one of those that rolls their sleeves up, that's willing to dive in. And that's one thing about you, Andrew, that I really like. And I think sometimes people don't want to bother us before it's really time. Excuse me. So, but I always tell them, you have to talk to, I can give you some ideas, but you really have to talk to Andrew. He's the guy to just educate yourself on. So can you talk a little bit about the pre-approval process?
Absolutely. So the pre-approval process really, every bank looks at it a little bit differently. But with us, when you get pre-approved, it's a pre-approval, and we are basing the pre-approval on the information that's been provided in the application. But what we have, which is even one step above pre-approval, I call it the gold standard in terms of a pre-approval, which is a certified pre-approval. Mm-hmm. And really what that means is that not only have we verified income, assets, credit, but we've also requested paperwork, i.e. W-2s, pay stubs, bank statements, retirement accounts, etc. We've run credit, we've run the automated underwriting system, and that's really the gold standard. And the certified pre-approval letter, it's not just a one-page document like you will normally see, Marianne, on your side. It's a two-page document, and the second page really just verifies what we've reviewed. And in this market, especially where it's mostly a seller's market, we know that. But it really helps our clients to put their best foot forward in terms of financing, taking the financing aspect off the table for a listing agent or a seller is really what we're striving for. Yep. And it really helps our clients, in terms of the negotiating process.
I can't say enough about that process, Andrew. I can't tell you how many times I see, clients, I always tell them, reach out to Andrew to look for that certified pre-approval and explain to them the difference of what you offer versus perhaps another lender. And, and sometimes they say to me, well, I talked to so-and-so lender and they said that, oh no, we don't do a certified pre-approval, but don't you worry, we'll be just fine. And what I try to stress to my buyers is, in a competitive market like we have right now, it is so important that we do as much as we can to prepare ourselves in advance. And a seller says that they want to close as quickly as possible. It is priceless to be able to have a certified pre-approval and to be able to say, you know what, we can close in 3 weeks. Excuse me,
Exactly.
we can get our financing commitment in 3 weeks because we are further ahead in the process, as opposed to that lender that's just starting to gather things when they have an accepted offer. Am I right on that, Andrew?
You hit the nail on the head, Marianne. Like really, the biggest, from a lender's perspective, the biggest issue that we run into in terms of timeline and closing quickly is collecting paperwork from the client.
Yeah.
And if we can get that up front, we have it ready to go. It's literally just pulling the trigger and we can get closed much quicker. And that's a great point, because we can move as fast as the client can move. And usually it's the client that we're waiting on in terms of our process, the way our platform is designed. It's usually, that's where the lag time comes, but you're right. So if we can get that paperwork up front, it's a hot knife through butter.
Absolutely. Yeah, good quote. The other thing that I find is that for my buyers, we'd like to say, right, that this is a piece of cake and nothing ever happens in this transaction of buying a property, right? But things come up and they're stressed. So what I find as well is that when clients do have a certified pre-approval and they're further ahead in regards to the lending process, there's a better comfort that they have as well walking into
exactly.
That they feel like they have more might and they have more abilities, to purchase. So yeah.
Exactly.
Andrew, as far as when somebody is looking to buy, they know they want to buy. Either it's the next 3 weeks that they're going to make an offer, or 3 months. What would you recommend that they do to get themselves ready?
Another great question. My biggest recommendation is credit, and the first most important step, and you touched on this earlier, Marianne, is get in touch with a loan officer and find out, even if you're only buying in the next 6 to 9 months, a year, whatever it may be, get a pre-approval straight up front, because then you will know, how's my credit? Do I need to work on my credit?
Mm-hmm.
Don't open any new credit cards. Don't close any old ones. Pay down your credit to at least, in my opinion, 50% of the limit or better. And really just focus on credit, and more credit. The more you can pay credit down, the more you're able to qualify for the house of your dreams.
Right.
It's really all about credits, and it's not as much about down payment, believe it or not. It's mostly about, what is your revolving debt every month, and have a professional take a look at it for you right up front, so that and you can put a game plan together, black and white. This is exactly my plan. This is what I need to do to qualify for the X house. That's my best advice. Yes.
I always find interesting, Andrew, is when you say, because you said the same thing to me, and I've heard you say it before, and that is, if you have an old credit card that you haven't used in a while, I just want a clean house. I just want to close everything down. And I hear you when you say, that's not necessarily the best thing to do. And right?
Correct.
Yeah.
Correct. I mean, and again, this is just my opinion. I'm not a credit expert, but I do see credit all day, every day.
Yeah.
Paying off or paying down credit is great. Closing credit, in my opinion, tells the credit bureaus you don't know how to manage your credit limit that you have, and they ding your scores. I've seen it happen. So again, just be very careful about credit. Anytime you apply for a mortgage, or you're in the process of a mortgage, or looking to get a mortgage down the line, I always just tell people, leave credit as is, pay down, yes.
Yep.
Not pay off.
Yep. Good. So Andrew, I think this is my last question, unless you have something else, but as far
Sure.
as, okay, so we have the offers accepted. We've signed the purchase and sales. We are moving through the financing phase. What do you recommend, or what advice can you give our buyers for that financing phase, and then even after their financing commitment has been met, up until closing? What are the do's and the don'ts?
Okay, perfect. And this is actually a list that I send out to my clients right when I pre-approve them. I've got it in front of me right now. So the do's and don'ts, and these are important. So do not obtain any new credit after your initial pre-approval. Do not open a new credit card, gas card, whatever it may be. Do not do that. That's going to cause a red flag, because the lender will want to know what credit did you open, and you have to verify it, and it could also affect your credit score. Do not make any large deposits into your bank account. Lenders these days have to verify where large deposits come from, other than your paycheck, clearly. Where did it come from? Is it mattress money? And most importantly, definitely do not deposit cash, like cash money, into your bank account, because there's no paper trail on that, obviously.
Right.
And that's a one I see a ton of. Don't withdraw any large sums of money from your bank account after your initial application.
Right.
Clearly, you're going to need that money, to go to closing, but it again causes another red flag. Another one that I've run into a ton: don't change your employment. Don't wait until after you close, and then you can start your new job if you want.
Then you can go.
And if you do change employment, make sure you cover this with your loan officer, because
That's right.
they'll want to make sure that your new job is sufficient for the income they're using for your current job to qualify for the mortgage. Don't sell or exchange any assets, that may cause a large deposit in your bank account. But definitely do notify your loan officer. These are the do's now. We just did the don'ts.
Yeah.
Definitely notify your loan officer if there's any pertinent changes to anything, whether it's employment, income, whatever it may be, close and change date, change and close date, etc. And just file your tax returns at least 8 weeks prior to the anticipated close date. Everything is a little out of whack on that one right now with the IRS.
Right.
But just be mindful of any kind of income, employment, asset, credit change that happens in during the transaction.
Such good advice, Andrew. I can't tell you how many times I've said to my clients, even after you have your financing commitment, hunker down. Do not go, out and open up. There was a story that a colleague of mine shared a couple of years ago about somebody that went to Jordan's Furniture and opened up just to get ready. They didn't buy anything, but they just wanted to be ready for the day of closing. I'm like, don't even do that. And I think it's hard, Andrew, and I think it's really, I love that sheet. I know that I've seen it and my clients have seen it, but I think it's really important that we constantly remind our clients of that, because, this is unusual. And again, I just went through this myself with my refinance. It's unusual to have somebody looking at your assets and your patterns and things like that. So it is something I think that's really important that we, even up until the day of closing, just hunker down and just play it safe, right?
Absolutely. Great point. And that's the most common one I get. It's Andrew, am I okay to open up a Jordan's, for example? And I always tell them, just err on the side of caution, and rather just, wait to buy your furniture till after.
I know. Hey, Andrew,
that's a good one.
You are awesome. Thank you so much for your time today. I can't thank you enough. I'm sure I'll be asking you again in a couple months to come on back and share what's latest and greatest and everything, but I can't thank you enough for joining me today. And so when I post this, I will, of course, have your contact information, so people can look up and reach out. Okay?
Thank you, Marianne.
You're welcome. All right. Take care.
All right. Take care. Bye.